Chip makers are living Nvidia loca, according to Mr. Matt Bryson, joining us from Wedbush Securities. Tom White in studio, ready to do some trading in the chip space after TSM's blasting off and breaking out here. Nvidia also putting in a new high. I like that turn of phrase, Matt. That was a pretty good one from a report in Nvidia late last year. All right, we're at highs for Nvidia, but TSM's the highlight this morning. How come the market likes this report so much when the trailing numbers still just aren't that impressive, are they?
So I think it really comes down to the forecast with TSM specifically. Obviously, there are some concerns around the macro environment. So going in, I think it wasn't quite clear what TSM was going to say about 2024. And what they ended up saying is look, inventories have been worked out of the system. We're seeing some signs of better demand, in particular in our HPC business, which for them is servers and PCs. And they highlighted that AI was going to be a growth driver through the year. Their guide for the year up low to mid 20% was above what anyone was expecting. And so I think that's why there's all that enthusiasm this morning. Not to mention, there had been some concerns around gross margins coming in. And they guided for steady gross margins in Q1, which typically is a low point for gross margins for them on an annualized basis because it's the slowest quarter of the year. So the utilization rates are at the lowest point of the year.
Okay. It sounds like, at least when we're talking about the trailing, the cleaning of the inventory and the management of the inventory and the hardware is playing a big role in this. But then also, to your point about the HPC division, that seems more like kind of a macro sort of cycle thing. Or am I wrong? Is that like pure growth AI induced? I mean, is this just kind of also a economic strengthening that's happening?
I think it's a couple different things, Oliver. So yeah, you've got some help from the AI side of things, and I would suggest that at this point that's only kind of mid to high single digits as a percentage of TSM revenue. So it's still, in the scheme of things, it's still not a massive contributor, but that number gets bigger as the year goes on. But then within that, you really had some conservatism in 2023 around IT spend because people worried about the macro. I think, and because so much money was getting spent on AI at the cloud service providers, I think that some of that does reverse. So companies go out and spend because we didn't see the recession that people feared. You have to upgrade at some point. And so I think it's a few different things. And then again, from an inventory perspective, just chip inventories got cleaned out in 2023, so it creates an easy comp for 2024.
Okay. That's love the stats here on kind of how much of their revenue right now is coming directly from the AI stuff. So it still is, a portion of the business, not the main driver by any means. When it's like single digits, low double. So Matt, if you kind of had to describe the trade-off between the macro turning point of the cycle, the surprisingly resilient economies, you point out people were expecting recession, people were expecting the inventories to lag even more. Is it a scenario where the AI developments are pulling us out of the downswing in the cycle, or is the cycle turning and the AI stuff is on top of it to where they go, oh, well, now we can buy a new chip because we've got better demand, let's get the new one? Or is it like we have to have these new ones and that's pulling us out of it?
So I think it's the scenario where AI is the AI growth is coming on top of a better IT spend cycle. So one of the things
Bingo.
TSM said was, look, Foundry's going to grow roughly 20%. We're going to grow in the low to mid 20s. I think you can attribute a good portion of that delta to a combination of share gains and AI growth, where TSM is somewhat unique in that they are supplying all of the AI builds out there. So whether it's someone like Amazon building their own chips via Broadcom, or I'm sorry, Google building their own chips via Broadcom, or Amazon through Alchip, or AMD or Nvidia. They're all using TSM.
Great stuff. Like that description. Want to talk Nvidia and AMD with you in a second, but while we're on TSM, let's do some trading. The interesting about this, Tom, is that TSM is still kind of recovering ground relative to the rest of its peers. The high from TSM still goes back more than a year ago. So this is a little bit of a catch-up story, even though we're breaking out to 52-week highs.
We are. 40% gains last year. If you look at it, their specialty, the 2 and 3 nanometer chips that they use, these are the high-end smartphone chips. They saw revenue growth of over 14% in that segment, despite weaker sales that Apple's been reporting lately, and a lot of the analysts have been kind of bashing on Apple a little bit. But that being said, Vol's crushed post-earnings because of the rally. So how do you want to look at this from an options perspective? Well, on a short-term basis, that lower implied volatility might give you more opportunities with the strategy that takes advantage of that, where you can get a low-cost entry point for sort of a bullish trade here. It's relatively neutral to bullish with a range. So I looked going out to the February monthly cycle, so just about 29 days till expiration. I'm going to buy the 115 strike call. That's about $4 out of the money to the upside. And then in the near term, Jan 26th weeklies that expire in 8 days, I'll sell that same strike, the 115 strike call. So about a 3-week wide 115 call calendar to the upside. You're paying roughly, I've got a $1.10 debit here. It might be closer to 125 at this point. But the debit that you pay is going to be the risk on this position. You're only risking per spread just over $1 on these. But you can see here from the risk profile, our range where we can remain profitable on this type of strategy is between about 110 and about 121 over the next month. Now, as you get closer to expiration, over the next 8 days on your short option, you'll have that ability to roll or adjust that short call, creating credits and increasing potential profitability. But I think a key with this type of strategy is, yeah, you think it's going to go higher, but you still have that range, and you're taking advantage of the vol crush that we're seeing in there today.
Okay, so even though the vol's crushed, it's still worth selling the 115 on this?
The 115, yeah, you're going to collect near $1 on that 115 call that you're selling in the January 26th weekly cycle. That offsets some of the costs on your bullish call that you're buying out in the February cycle.
Okay, so still discreetly bullish, just giving yourself a little bit of kind of a calendar hedge here in a way.
Yeah.
All right, $1.10 to do it. TSM still up 8% right now to 111. An interesting point too I like on Apple too, after all of the negativity, that maybe things aren't too bad in that category. AMD is the one that seems to be getting the knock-on effect. I mean, Nvidia is at new highs right now, but AMD going nuts this morning, Matt. Where's the connection there? Is there a more direct TSM connection through Advanced Micro?
Certainly TSM is going to be fabbing those chips for AMD, and so I think the expectation on the buy side is not so much that you get a huge contribution from AMD in the first half of this year, but when we get into the back half, you see pretty significant revenue growth and from AMD, and that from a TSM perspective, contributing to TSM growth. But I think in terms of what TSM said, where CoWoS is going to be tight, that's the packaging technology that they supply to, again, whether it's AMD, Broadcom, or Nvidia, it has positive ramifications for all of those companies.
Okay. Nvidia right now, still, I guess, a valuation that the market's able to tolerate given the earnings boom here?
Yeah, Oliver, I think the concern with Nvidia had been that you get some sort of pause in AI spending, say Q2, Q3 of this year. Today, you have TSM telling you that they're not expecting any let up in their packaging business. It's going to double year on year, and they're still going to be short exiting the year. So that would suggest that there's no pause in at least NVIDIA's projected builds. So they don't see a pause in sales. And then the other thing to think about is you've got Google talking about having to lay off people in certain divisions so they can invest more in AI. That's one large cloud customer who's effectively saying that they're spending more on AI year on year. So again, another positive sign for AI.
Okay. Thanks, Matt, for the analysis. Good stuff. Helpful to figure out why the market likes this so much. Tom, you got a trade on Nvidia here. Also bullish, but still some element of selling of premium here.
Yeah, a little bit. They've got earnings on the 21st. Maybe you don't want to be involved in the stock going into earnings. Maybe you do. I looked at a strategy that, this is a $570 stock, right? It's hitting all-time highs today before pulling back just a little bit, but still positive. That sends some caution into me. So why don't we look at a cautious bullish trade here, neutral to bullish in there. And I went out to the February 16th monthly cycle. So about a month till expiration. I'm going to avoid that earnings event, but I can take advantage if the stock continues to creep higher or remains here or even goes a little bit lower. I can still remain profitable. So going out to that February 16th monthly cycle, 29 days to expiration. Looked at selling an out of the money put vertical here. I can collect pretty hefty option premiums on those. Sell the 555 strike put, and then to make it risk defined, because even though Nvidia has got a good outlook, if the market pulls back, Nvidia will probably pull back also. So I bought the 535 strike put against it, $20 wide short, neutral to bullish put vertical here. I'm collecting a credit of about $6.20, so I can profit $620 per spread on this. And you can see here from the risk profile, my break even's all the way down just below 549 over the next month. That's about 4% below the current share price. So I'm giving myself that cushion. That probability of that break even just below 550, finishing out of the money at expiration, which is what you want, is about 65% at this point. So this is a type of strategy where stock goes up, stock stays where it is, stock goes lower, but remains above that 548.80 break even. I can remain profitable. The only downside is if it slips back below there, back below 535, that's where we're going to have max losses. But neutral to bullish, taking advantage of some elevated implied volatility and avoiding earnings.
All right, a bullish trade with a little hedge to the downside to get some room to breathe. So most outcomes, you're making money, a high probability trade for Nvidia. All right, thanks for the trade, Tom. Thanks, Matt Bryson, for the analysis.